Welcome back, everyone. This is an update on the oil market. November continues to be a rather strong month for oil prices as the headlines from various important matters around the globe continue to reel in, affecting the commodities price. In this report, our aim is to briefly overview current matters that are moving or have the potential of moving oil's price. Detailed trading information for WTI's price will be provided in our technical analysis. To start with, we take a look into the weekly oil market data from the US. On the past Friday, we received the weekly US Baker Hughes oil rig count that indicated active oil rigs rose by 10, now reaching 236 overall. We must note that during the past 8 consecutive weeks, numbers confirm a steady increase for active oil rigs, confirming demand has risen accordingly. On Wednesday, the American Petroleum Institute weekly crude oil inventory levels came out with a considerable surplus of plus 4.2 million barrels, a figure that is mostly interesting for the sellers as it could indicate weaker demand. Yesterday, the Energy Information Administration's weekly crude oil inventories figure was just at plus 0.8 million barrels, a rather bullish sign for the commodity. The figure reverses the previous week's surplus. Thus, buyers could be enticed by this outcome. Overall, we could say that the 3 indicators provide mixed signals for the oil market. In any case, in the November OPEC report released in the previous week, it was stated that global oil demand for the current year was revised downwards due to the lower demand in the US and the most recent announced COVID-19 lockdown measures by various governments in Europe. On the other hand, China has stepped up oil purchasing according to Reuters. China is the only economy among the G20 to close the year in growth. Thus, it would make sense for them to increase their imports for oil and push demand somewhat higher. At the moment, the general market's attention falls on the COVID-19 outbreak and the matters surrounding it. In the past days, a lot of emphasis was placed on headlines on a possible vaccine. Any vaccine effectiveness and release date headlines seem to excite traders in general. In this case, we could see WTI traders engaging the market, possibly adding buying positions. If the vaccine is released prior to the closing of the year, demand for oil could rise substantially and on a fast pace. Furthermore, the oil market seems to be interested in the further steps of the OPEC Plus group. It is expected that OPEC Plus will increase production immediately as we enter the new year. However, with the latest surge in COVID-19 cases globally, analysts are expecting the influential oil group to postpone its plans, yet the subject remains highly uncertain. As a closure, we would like to sum our fundamentals with a latest report by Goldman Sachs. GS currently forecasts a dramatic rise in demand for commodities in the next year, 2021. The forecast, which refers to the energy sector specifically, sees a return of about 40.1%. In our point of view, WTI has already picked up noticeable price activity in November, and the trend could persist in the short term. Those were the fundamentals for the commodity. Please stay tuned for the technical analysis. First, we must note that WTI has been moving higher for the past 2 consecutive weeks and is currently higher from where it started in the current. On the 11th of November, the commodities price moved higher to test our R1 4350 resistance level, but retreated soon. Yesterday, the 18th of November, another move higher was made, but the R1 was not clearly tested. Please note that these 2 attempts are the highest that WTI has reached since the start of September. In our opinion, this is a clear bullish tendency. Thus, our outlook for the short term remains on the buy side. In case the R1 is breached, the road can be set for the R2 4550 line to come into play, while the R3 4750 hurdle is also imminent in case of a substantial jump higher. In the opposite direction, the S1 4150 support level, which the current price action lies upon, is the first to be breached. Lower than that, the S2 3975 support line has been tested previously in November and could also prove a challenge for the bears. Last, we have noted the S3 3780 barrier, which, if attempted or even breached, could confirm a selling momentum. That's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, please follow us on LinkedIn. Thank you very much for your time. Enjoy solid trading.